Time now for the weekly market roundup on the Rural Radio Network. I'm Steve White. It's another week where we've seen some headlines outside the market seem to be just as loud as what's going inside the markets. Traders bracing for some new inflation numbers, geopolitical tensions. Does that sound like anything we've not heard before? In the middle of all that noise, though, grain markets maybe feels a little sleepy with some low volume post-holiday trade going on. Corn, some bright spots maybe with some export numbers that look pretty good. Wheat, some challenges, the livestock markets, what is going on there? We're going to break it all down. Mike Zuzolo from Global Commodity Analytics, as well as JJ Lauby with Agri Management Systems near Holdrege, Nebraska, joining us. We're going to kick things off with Mike. Let's take maybe a minute here and talk about some of the macro things that we're looking at, whether that's inflation, crude oil, the value of the dollar. Are we in a situation now? How much of that, those things, those outside markets are shaping what we're seeing in the grain trade these days, Mike?
Yeah, I'd say, Steve, quite a bit this past week. And I think the headline news was probably on the Federal Reserve and the outside markets really dialing in a Fed rate cut here this month in about a week or so. And that was something that pushed the dollar to a new 5-week low. Probably number 2 on the list for the macro side would have been what the Russia-Ukraine peace plan falling apart essentially did to the markets, and some of the rhetoric coming from Russia's leader that tended to goose the crude oil and the wheat and also push and put more pressure on the dollar, I think. And so by the time we got to midweek, the trade was kind of lining up with maybe we'd be able to get a crude and wheat led recovery and some short covering. But this common theme we keep seeing heading into 2026 for wheat and crude oil is oversupply, and it came in the form of wheat with Australia and Argentina, and then finally Stats Canada came in with a 40 million metric ton production number, up about 11% versus last year. So wheat finished the week kind of right back in the supply-demand fundamental category that it tended to start or end last week, and kind of the same with the grains.
Yeah, very interesting. JJ, I want to pick on you. You were on the road. You were out there talking with folks. When you're visiting with producers these days, what kinds of questions are they bringing to you about the markets these days?
Well, what do we do? That's the big question. There wasn't a whole lot of pre-harvest sales that were done. So now with the markets where they are, the big question is, what do we do? I hate to say it, but this bridge payment that we're gonna supposedly they're going to announce next week, we need it out here. Things do not look good out in the country as far as cash flows go. There's going to be, I think, maybe quite a bit of land sales this winter. Guys may be having to sell off a quarter. Things just don't look real good right now. And the big question is, what do we do? Unfortunately, without China coming in here and actually making these purchases that are in the trade agreement, there really isn't much hope. Supplies are burdensome, and there just really isn't a whole lot to do right now.
Well, JJ just mentioned, Mike, I want to ask you about this. The China's commitment, 12 million metric tons. A lot of discussion about, is that going to happen? When's it going to happen? Are they going to meet that commitment? From your vantage point, Mike, how do you read that?
It's going to be tough because we're running out of runway when it comes to Brazil coming back online, Steve, with being the main seller to China. And we saw this week, and I think one of the big reasons why beans went ahead and made new weekly lows as we closed out Friday's trade, and with the corn trying to go up towards its highs for the week, and that divergence in those two was heavily weighted upon the fact that Brazil shipped out over 4 million tons of beans in exports in November, and that was up, I think, around 70%. And so by my calculations, if you look at China and unknown sales since the end of October, early November, we're probably around 3.3 million tons sold to China and unknown in soybeans as of Friday, which we got another small sale to China on Friday. That's just not enough. And I think the trade is finally starting to say, we put a lot of premium in this market, betting on the demand situation improving we had some South American weather to keep us aloft and keep us elevated and maybe keep some risk premium in it. But southern Brazil looks like it's going to get some rain next week. And I think these things kind of dialed into the trade, and the long said, let's take some money off the table on Friday.
Yeah. JJ, I want to pitch it back to you in terms of China. Do you get any sense that they're going to fulfill that commitment, or how do you read that one?
Those Chinese, they're pretty shrewd businessmen. It wouldn't surprise me to see that maybe they're maybe long some futures and going to take delivery on those futures. I don't know how we actually find that out, but it wouldn't surprise me. But yeah, I think I have the utmost confidence in President Trump and what he's trying to do, and I believe that China needs us more than we need them. And when you really break it down, and I think that they will end up signing this agreement, and I think that they will make the purchases, which probably will give us an opportunity to get some soybeans sold out here in the country. Now, whether or not they actually take delivery of those soybeans or not, that remains to be seen. But yeah, I think China will. I think they will buy the beans.
Well, we will keep watching that. Mike, I want to also ask you, just on terms of exports, we are seeing some flash sales. We are seeing, especially on the corn side, I should say, we are seeing some pretty strong numbers. Do you see some sustained export strength? Is this demand driven? I mean, do we have some reason to feel bullish about what we're seeing on those corn exports right now?
I do think corn is on the verge of a demand market. Everything we've talked about in the last 2 years, Steve, has been essentially weather and supply driven. But I think in terms of corn, if you take the wheat and the beans out of the equation, and you can't do that because corn can't live in a vacuum. But if you just looked at corn, our world stocks are still near 10, 12-year lows. Our stocks to use levels globally are at the lowest since 2012. And so if we would keep a weather market going in Argentina especially, and be able to see that Ukraine keeps falling behind more and more on their exports because of logistics, because of war. The Odessa port area has been bombed several times. That's been noted by the Ukrainian officials. I do think this export demand and the domestic ethanol demand will continue at the pace we've seen, up to these last few months. So I think corn is still the best thing to hold in the bin. Now, having said that, I'm starting to see some guys call me back east of the Mississippi River. They're getting back towards $4.50 cash markets. That's a price level we really don't want to go back below. So that's where the WASDE report, both December and January, come into play. We need to see the yields come down in Illinois and Iowa. I think they should. I'm more at a 182 national yield. And if we get that kind of a yield and USD didn't monkey around with feed and residual too much, that'd probably take us down to about a 1.7, 1.8 carryover. That could justify around $5 new crop futures, again, without looking at corn or looking at beans and wheat.
You mentioned wheat there. Let's talk about wheat for a moment. You talked about the wheat picture. Canada, they are talking about just a huge wheat crop. Unless there's some sort of weather issue globally, are we just kind of stuck in a hole on wheat? Mike, what do you think there?
Yeah, I think so. I mean, I think this is where the wheat market is, like I said, with the crude oil, that the trade and the funds especially are really on this, banging this drum of oversupply in 2026. What's going to work us out of that? Like you said, winter weather in the northern hemisphere, or something geopolitically, until we get to like February, March with the coming out of dormancy. But we do have a vulnerable wheat crop. The trade's just not looking at, I don't think, that much right now.
JJ, South Central Nebraska was once a spot where we saw a lot of wheat acres. This fall, what are you seeing in terms of winter wheat in your neck of the woods, would you say?
I would say acres are down, and especially in Southwest Nebraska. You get down into Kansas. I was just down to Garden City over Thanksgiving, and it looked like there was a lot less wheat planted down there too. Now you look at the conditions of wheat, and we're above where we were last year, but it doesn't take too many cold snaps without any snow to kind of do some damage to that wheat. But again, like Mike said, we're not really gonna going to look at our crop too much until we start coming out of dormancy there on that wheat.
Yeah, absolutely. We still have to talk livestock. We haven't done that, but we better reset things. This is the weekly market roundup on the Rural Radio Network. Mike Zuzolo from Global Commodity Analytics, JJ Lauby from Agri Management Systems are our guests today. So we're almost to that point where we need to wrap things up. But Mike, we've not talked livestock yet. We'd love to see a strong Friday finish, I'm sure, both in the grains and cattle. Any thoughts on the cattle trade as we start to wrap things up, Mike?
Well, the early winter weather came in. I was hoping it would when we talked during the NAFB, and it did. And I think we're better supply demand balance now, Steve. I've told clients that 225 fats and 345 feeders as far as marketings and getting caught up, probably areas you might want to start looking at it for the here and now, but then maybe be a little bit more picky, a little bit more choosy. We had good holiday demand. I think weather and holiday demand really did help a lot in pushing the shorts out of the market.
And JJ, you've got some livestock customers. What are your thoughts on livestock marketing as we're nearing the end of the year here?
I love what we've seen here since we put the lows in there before Thanksgiving. It's kind of ironic that Tyson did what they did shortly after the DOJ is going to start looking at them. But this here to me looks talk about market manipulation. You know, the way they made that announcement on a Friday, cattle on feed report day. So there was no LRP insurance for people to get, but you know, they totally, I believe that they really manipulated that market. It would be I'd be real interested to see just how much inventory they locked up in the last 7 to 10 days here, and then we saw the cash market sell off, scared the feedlots into selling, and now we've seen this $20-$25 rally. And I think the supply situation is going to do nothing but get tighter going forward. Previously, I was thinking maybe the high was in on these cattle, but the more I'm out here talking to guys, we just don't have any, and we don't magically make new cattle overnight. Whether or not Mexican border opens or not, those cattle aren't gonna just flood our market. So I think we've got a considerably more upside to go on this thing.
Well, that's some interesting thoughts there, especially on that Tyson. I always think no good news comes out at 3:00 on a Friday, right after all the markets are closed and the reports are done, does it? It's the way it goes sometimes. Well, thanks so much, gentlemen. Great insight as always. We'll continue to watch where things are going. Cattle markets, we're going to continue to watch that and the Tyson situation. And as mentioned here, that WASD report, we will be watching that in the week ahead to see what we can glean from that and how the markets will react. Mike Zuzolo, Global Commodity Analytics, JJ Lauby, Agri Management Systems. Thanks both for joining us. As a reminder, commodities futures do involve substantial risk of loss, not suitable for all investors. And that is the weekly market roundup. I'm Steve White on the Rural Radio Network.